Alrighty traders, hello everybody. So today I want to cover with you the 100-year cycle that's been going on right now in these markets here. And I think it's really amazing when you can start to look at things not from a now perspective, but from an overall perspective. And that's going to help us understand where we are in the big major cycles of things and where we're likely to be heading moving forward, because then we can start to make some really good decisions. Because unfortunately, one of the biggest mistakes that a lot of traders make, and I was there for a while as well too, is focusing so much on the short term picture. So traders, see that book on the screen there? Wherever it is, go get it. So let's actually go into these markets here. So what we're looking at here right now, you can see here, this is a rough gauge, and I say rough because it's not exact, but it gives you a template on where we are on the 100-year cycle of things. This is a 10,000 foot view. Now, this is what's going on right now, what's likely to come up, so therefore we can stay emotionally calm to make good decisions of where we're likely to be heading for the next 5 years and how that's likely to play out. Because I think it's really incredible if we can see the forest from the trees, big picture here, then we can start to make some really good decisions. And that's my goal from this video for you guys today, right? So as you can see on this chart here, I've done all the drawings for you guys and stuff like that. Now, one of the big things here is, before I get into this template here, one of the big things that stops us, remember that whenever there's a lot of fear in the marketplace, then they tend to be good ideas to be looking for entry points. And if you have a look at the last, since COVID days, right? Look at this here. Ever since 2008. Why have we continued up from here? Now, people say printing money and whatever, right? Whatever. You just understand that there's actually an overall big, massive cycle of things going on through here. So one of the things that I really want to encourage you to do is that as I've continued on with my journey as a trader, I've now gone from an amateur to a professional. What does a professional mean? Professional means I've just had a lot of experience. You know what I mean? Like, I'm now, instead of getting emotionally drawn into the short-term picture, I'm now not there because I know where we are right now and so on and so forth, right? And that's what the whole thing about, you know, I used to be like that. I've been trading the markets for 20 years and I got so sucked into the short-term picture. But unfortunately, the short-term picture is always going to be on the wrong side of the curve there, right? So if we have a look at, say, for example, see this bit through here. See how we've actually had this bit through here since this is big monthly charts, Dow Jones, okay? And as you can see, ever since we've left the highs here of 2008, we've continued to have a very big, strong bull market here. Now, very strong bull market in the mix of what? This is about 1 to 2 years of sideways movement. This here was the tariff, the recession fears, COVID, recession fears, and then also tariff. But look at this here, right? But what happened every single time we had a 20% drop or more in the marketplace? They were amazing buying opportunities. But this is where it gets really difficult for the people that haven't had experience in the markets, right? Because I've had now 20 years experience in the markets, I've seen these things come and go. I've seen the patterns come and go. And my job through this is to try to give you forest from the trees so you understand when the pattern comes again, meaning we get another one of these freakouts, one of these lemons, then you can take the lemon, turn it into lemonade and maybe add some sweetener to it and have a beautiful drink. What I mean by that is that I've seen this thing come and go. That's the reason why I have a coaching program, by the way. That's the 1% Club where you're with me every day. So if you're looking guidance around these sort of processes, trading opportunities and so on and so forth, investment opportunities, then you may be good for that 1% group. There's that link in the description there, guys. But look at this thing through here is, as we can see here, right? Typically what happens with these drops here, if we're so focused only on the short-term picture, maybe even weekly charts, the last couple of months, maybe 6 months, even the last 12 months, that's the short-term picture. Daily charts, focusing on the short-term daily charts. So even if we are doing that only, we're so focused on the very short-term picture, and we can't see the forest from the trees. And so what ends up happening is what? We go through this process here, and we go through the process of getting so sucked in, because what is these movements down here, and here, what do you think was happening at the time? News, recession, big crash coming. The herd mentality. Oh my goodness, it's crashing. They're short in the market. They're buying put options. Everything's so negative. Fear, fear, fear. See what I'm saying here? But what was that whole, oh my goodness, it's over. There's a lot of talk about that. What ended up happening? The opposite. See what I'm saying here? So right now, and this is where like bit of a short-term thing for you guys. Right now, there's a lot of fear in the marketplace. People calling tops. There's an overwhelming majority of my comments, probably at least 70+%, 80%, are saying tops in. It's a dead cat bounce. It's going to go down. There's a lot of fear in the marketplace. So that's why I'm saying, like, short-term picture, like right now where we are in the stock market now, that's why we have so much more upside to go. Why? Because tops and bottoms don't happen when there's a herd mentality around the thinking there. Because once again, all through here, what's the herd? What's the news? What's the media? Everything is so, oh my goodness, this is going to destroy the economy. The market's crashing. I need to get out. Oh my God. And then 6 months later, the market bounces and continues back up. So one thing I've learned, and I haven't always done this, by the way, right? Over the last 20 years of trading, I've always been a shorter term trader, but now I'm getting more into my bit more experience. Over the last 20 years, I've seen these things come and go, and now I can capitalize on these massive turns because I see the patterns repeat again and again and again and again. That's the reason why I do coaching, to stop you guys from spending 20 years of experience and stuff. So as you can see here, so the purpose of this here is, one, I want to try to show you that whenever we start to hear a lot of one way, we need to be emotionally calm, say, I probably need to be not going down that path, because it's probably going to be the opposite. And once again, that's where, like I've said in this video, and you're seeing around the marketplace, you're seeing a lot of fear around the marketplace of the market going down. The top is in, it's going to drop. The overall majority of comments there. The fear and greed index is still around the fear as well too. So there's still a lot of fear here. That's where tops are not made, right? When was the short-term top? If we actually bring on the short-term analysis here, and we just bring on, say, for example, I'll bring on this chart right here, and we actually do go to gold. When was the short-term top in gold? It was up here, right? That's why I was saying I'm getting ready for a correction, and we got the correction. But what was happening all through here? All this process all through here, what was happening? Even actually probably a lot more than that. Mining stocks, the overwhelming majority of what? You're an idiot, John, you'd have no idea. And I was telling people there's a big correction coming, and we did get the correction, right? That there was a 10+% correction in the silver market. You know, we went from there to there, which was I was just letting people know there's a big correction coming, and we got the correction. Anyway, it's neither here or there, but I'm trying to give you an overall sentiment of what people see, right? And what people get into and why people get it wrong so much. So if we go back to these levels here once again, and we go back to, this is not about gold, this is about the overall stock market where we're at right now and the big picture here. But also the sentiment around all markets, right? So if you think about, this is where, as you can see here, in the last 10 years, when has been the best buying opportunity? When there's been major freakouts and the herd and the media and the headlines on, and the stock market biggest drawdown in the last 20 years, and woo, we go down the process there, right? See what I'm saying there? They've been the best buying opportunities, right? When is the worst buying opportunity? When the herd mentality. That's where, like, if you are going down this herd, like, oh my goodness, everyone getting on the train. Now you understand why most amateurs lose money in the markets, because they don't understand the psychology of this. They think, the logic thinks in these markets that if there's a lot of fear in the marketplace, that fear is going to create a crash. That's the logic brain. But the psychology of the markets, this is the reason why that's what the markets do. They get the average individual in. They don't understand these cycles of how the markets work. They try to apply some logic. There's so much fear. The market's going to crash. It's going to go down even more. And whenever that's happening, and we're starting to see all this sort of, we know we're very close to a bottom. Case in point, the last 10 years. Every time we've had these where these arrows are, there's been major freakouts. You know what I'm talking about here, right? What happened with the tariff situation this year? This is the tariff situation here. So as more of a bit more of a sophisticated trader and investor myself now, I call myself sophisticated because I've just seen experience of how these cycles work, right? And so this is where, like, whenever we're seeing these cycles at play, there was a lot of people on one side, then they're probably good buying opportunities. Now, buying opportunities, but then allow the 6 to 12 months to play out. Just like what? Just like this COVID crash through here. That was the COVID crash through there. Look where we are right now. It does take time for it to bottom and go up, right? It's not a matter of 1 week or 1 month, right? But we need a good 6 to 12 month view, and then we can start to capitalize on that bounce and the way we go again. So that's the first thing I wanted to mention to you guys around the cycle thing, because one, I always want to keep you up to date that if you're looking for good buying opportunities, and there's another really good buying opportunity coming, there may be one right now, right? With just the negative sentiments around you're just seeing it right now. That's why if you've been watching my YouTube videos now for the last couple of weeks, I've been saying, and it's been right for the last now week or so, is that I'm expecting a really big strong move up. The only reason why I'm saying that is, one, the chart is still in a very big strong bull market. One, so technical analysis is saying bull market. Two, there's an overwhelming herd of looking for a top. There's a dead cat balance. It's a rounding top. It's going to short. This is the herd mentality I'm seeing right now. The sentiment is very weak out there. So if you understand the sentiment of this here, right? And I'm not here to say right or wrong here. I'm just trying to give you purely fact evidence. When was the best buying opportunities in the last 10 years? When we got these big drops and everyone was saying that was it. No, not everyone, right? There's an overwhelming herd. There's overwhelming herd media out there, and you know yourself what was happening when the tariff situation came down. You know yourself, you're there. Let's learn from that. When everyone was freaking out in the market, big drop down, and oh my goodness, it's coming on. Buy, beautiful buying opportunity, and then here we are 6 months later. But see how the cycle repeats. These patterns repeat again and again and again and again and again. Even where we are right now, we haven't had a big drop, but the overall sentiment is probably the same in the market going down. It's like, it blows my mind. That's what I'm saying. Like right now, get ready for a big melt up, because there's so much negative around this marketplace. But it's also good. It's one of the reasons why I'm long. I'm doing really well right now. I've got options in the SPY. Bit of a short-term analysis for you guys on the SPY. That's why, like down the bottom here, right? Let's actually, I'll bring on the S&P 500, right? Here. Down the bottom here, it's actually around about this level here. I started doing videos saying, guys, and we're getting ready for a melt up and so on and so forth. And we had a big bounce here. This is just the start. Santa Claus is coming to town. You know that. Anyway, that's a short-term analysis. I'm long. I'm already up with my call options here. But that's not what this whole video is about. The reason why I'm saying that is because the reason I'm saying this is because of the herd mentality, right? Sentiment of this here. So let's actually go back to, let's bring up the Dow Jones here. I'll share with you in just a minute here. So this is what we see right now, right? We see this where we are right now, but also, so that's what's happening right now in the market. But also I want to share with you, there's a big long-term pattern, the 100-year cycles that are at play. What's happening and what's likely to come up. So firstly, we can see here that these square boxes here are 10 plus years. I say 10 plus years because this is probably 13, 14 years, 13, 14 years, 13, 14, about 12 years before the bull market, right? So they're averages, not exact, but it gives a bit of a template, a guide of where we are and what's happening here. But notice something here. Whenever we go through these really sideways consolidations, bit of FYI, after 2030, when we finish this, guess what's coming up again, right? You do know what? Another one of these what? Lost, you probably heard the term lost decade. Now you understand that, right? Next 5 years, probably very big, strong, but we're probably going to go through another one of these lost decades in the markets where you can see the pattern just repeating here, right? It's just a simple pattern. It's time and time again. Now again, but it's an overall pattern, right? It's not like today is the day. No one can do that. This month, the month. No one can do that, right? But what we can do is give you a bit of a guide around the pattern itself. So we can see here, 10 plus years of the bull market here, or 10 plus years, and then we go through a very big bull phase. Now, what does the bull phase include? If I zoom in on, say, for example, this bull phase here, look at this here. low, up, then it dropped down, higher, low, up. This here was about 2 years of sideways slight drop and then back up and sideways slight. But do you see the overall, even though these highs to lows here, this here was a 20% drop. This here was another 15% drop. You know, this one here was a 10% drop. This one here was, you know, roughly around a 20, 30, or actually, what's that? This one here was around about that 25 to 30% drop within these secular bull markets. So what does that mean? In a very big bull market, we get these high lows. But if we're in this 16-year bull phase, as example, we're going to go through these 1 or 2 years corrections. 1 or 2 years. Isn't that a quinky dink? What I mean by that is this. What happened back here? This was what? A 1 year of a correction in the markets. Then the recession comes out and so on and so forth. So the purpose of me saying this is, one, that look at where we are right now. This is rough. It's a rough gauge of we go through these major expansions for 16 years, 10 plus years, 16 years. So right now we're 12 years in. We probably have another, I would say another 5 years to go. So another 5 years to go within this very big bull phase. How that's going to look though is what? We're going to get these movements, but even if we do get, say for example, next year or the year after, with the next couple of years, we know there's a bit of a correction coming in the markets. Not right now. There's too many people negative. Don't fight the market, right? It's like too many people negative. Go with the market. Anyway, right? Don't be sucked in by the herd. Remember, amateurs lose a lot of money. The retail loses a lot of money because they run with the herd, and the herd's always wrong. Right? Again, repeat myself. What was happening down here? Herd, crash, man, oh my goodness, it's all over. Trump, oh my goodness, fear, 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 fear. Retail, a sophisticated investor, I've seen this lemonade before. I've seen this lemon before. Let's turn it into a beautiful lemonade. Right? And then we go through big, and then 6 months later we go through big bull market. Right? Big bull market. So when I'm looking at this level here, and when I'm going down this process here of looking at these charts here now, we know, okay, probably in the next 5 years, we're going through a big book. We're continuing up here. But that's going to consist of what, right? You see this here with the Dow Jones. If I bring on the S&P 500, and I'm going to get to the S&P 500 chart, you can see here that this is probably going to look something like this here on the S&P. So for example, right now, I don't believe the top's in. I believe we have a bit more movement to the upside. So we're probably going to move up to 8, maybe even up to around that 9,000 level, round about there. That's where I believe we're headed to over the next 6 months. Then we're probably going to go through, then when that happens, we're going to go through a big correction. There's going to be a tightening, right? There's going to be a squeeze. The market's going to go down, maybe 20%, maybe 30%, maybe even more. But what's happening through here? We're still in a very big long-term secular bull market. Long-term, look at this here. Meaning, as we broke out here, we had this low, big move up, significant higher low, higher low, higher low. Even if we come up and come back down to here, which would be, by the way, if that happened in 2020, like into next year, like end of 2026, which probably not 2026, maybe 2027. Guess what 28, 29, and 2030 are going to be like? Oh my goodness. So this is why I'm saying, like, the overall movement is very, very, very bullish here for the next 5 years. And we're probably going to continue this phase from here. So if I go back to, say, the Dow Jones, this is where people that are saying the top's in and all that sort of stuff and the market's going to crash and so on, don't listen to those Muppets on YouTube. You know what I mean? Like, I'm showing you statistical, factual evidence here, not my thinking or my fears or my doubts or an idea. Look at the patterns that's repeating here. And that's what sophisticators do. They see the patterns, right? So yes, we're going to go through these nice moves up and we're going to go through maybe another year or so correction within the next 5 years. That's what's going to happen. But it doesn't mean the overall big bull market is. And no, there's not an 80% collapse coming, even though there's some people out there saying that. There might be a good 30, 40% crash, but nah, not that from there. So my hope through here, guys, is to really share this with you, to give you a bit of guidance on the next 100 or the last 100 years template. One, to understand the fear and greed in the marketplace and why most retail traders actually don't make money in the markets and how you can take advantage of that by learning from what I talked about here today. But also Secondly, I want to actually understand about how this is likely to form. So in the next couple of years, when we go through one of these crashes again, you're not going to be so freaked out about it, right? And then thirdly, I want you to understand that right now we still have probably another 4 or 5 years to go in this very big bull market here. So I'll speak to you soon, guys.